Everybody gets a piece, we're going mainstream. Everybody's gonna eat, we're going mainstream. All my family is sing. See you on Main Street, we're going mainstream.
From Wall Street to Melrose Avenue,
We're going mainstream.
venture capitalists to athletes to
We're going
creators
mainstream.
to the person who's collecting trading cards
We're going mainstream.
in a collision of culture and finance.
We're going mainstream.
Welcome back to the Alt Goes Mainstream podcast. Today's episode features an enabler of the micro VC movement who has now scaled his business into one of the industry's larger fund administrators. Braughm Ricke is the founder of Aduro Advisors, a leading fund administrator that has carved out a sterling reputation in the VC world. He's grown the business to over 120 billion of AUA and over 450 customers, including many leading VC funds like Lowercarbon, Cowboy Ventures, Ahoy Capital, Craft, Haystack, and many others. They've also managed to combine a high-quality service with innovative technology and a partnership strategy that has enabled them to differentiate from other fund admins. Prior to founding Aduro, Braughm was the founding CFO of True Ventures, a leading Silicon Valley VC fund. Braughm is incredibly knowledgeable about private markets and is also an active investor in the private market startup ecosystem, investing early in the likes of Carta, Allocate, Passthrough, Arch, and others. Braughm and I had a fascinating conversation about the evolution of fund administration. We discussed why Braughm started with emerging managers and the unmet need he saw to serve them, why he believed the emerging manager landscape would grow, how he's moved upstream beyond venture capital clients, and how fund admin can integrate technology. Thanks, Braughm, for coming on the Alt Goes Mainstream podcast to share your wisdom on building a core infrastructure provider for private markets.
We're going mainstream.
Braughm, welcome to the Alt Goes Mainstream podcast.
Thanks so much for having me.
Pleasure to have you on. You have a fascinating career, number one. Number two, you were early in the world of emerging managers, and you've built a fantastic business at Aduro that's become a massive player in the fund admin space. So excited to talk about all those things. So you were a CFO at a venture fund. What was the fund admin space like when you were CFO at True?
It's a really interesting time in the market overall because in venture specifically, the fund admin space was a little bit more nascent, I would say. You had fewer players in the market, of course, especially when it comes to players that wanted to work with a venture capital firm. You mainly had Standish, and they were very much upmarket from a venture standpoint. There weren't really too many other players that wanted to work with a VC. So for us, it was very much a forcing mechanism of being what's considered self-administered. We had to effectively build everything from a systems, process, tech stack, team, etc., all in-house, which was the traditional way of doing things for a long time. There weren't a lot of options for us back then.
Walk me through what it was like to figure out how to handle fund admin, because you did that in-house. You were the CFO. Not every venture firm had a CFO, but you were at your firm. How did you navigate that process? And then that's a great bridge in jumping to how you decided and why you decided to start Aduro.
I'd been in prior firms for quite some time. Going back, I had started in venture back in 99 at Sophonova Ventures originally. Had been in and around the space for quite some time. I've seen operations at a larger firm, operations at a smaller firm, having gone to 5AM Ventures after Sophonova, kind of a much smaller operation. And really taking the learnings from that and applying that to, okay, how would I want to build something from scratch effectively? That was one of the big benefits of being the founding CFO at True, of getting to start from scratch, if you will. And I think a lot of the learnings of what we built there did dovetail into how we thought about building Aduro as a whole, especially in the early days. Maybe not as much today because we're quite a bit bigger, but definitely in the early days, a lot of those learnings poured over.
What was the trigger point that got you to make the jump from True to start Aduro?
I always go back and talk a little bit first about why I joined True at the outset, and then how that dovetails into why I decided to start Aduro thereafter. Back in late 05, early 06, I would say it was kind of the emergence of the next big trend in VC. And what that was is what I call the next generation, or what a lot of people call the next generation platform VC. So the Union Squares, the first rounds, the Uncorked, what was Soft Tech, and then True. Really saw that as an opportunity to join True at the outset and help as a part of that next trend within the venture space. What I started to see at the end of 2011, early 2012, when I first embarked on the thought process around starting Aduro, was a next big trend, which was the emergence of the emerging manager, which is a very broad category. That's a very big bucket, but really started to see that as an opportunity there in front of us. And was informally helping some of these individual managers, these solo GPs, with advice and things like that, and really started to think, wouldn't it be interesting, wouldn't it be fun to, number one, build something of my own, but number two, build something that really is there to support this community that's going to be the next big trend within VC.
How much did you think about Aduro initially as, here's what we had at True? Obviously, there was the ability, desire, and possibly the AUM to be able to support having a CFO and a team focused on operations in-house. How much did you say and think, okay, I can be the version of True CFO for all of these emerging managers that they don't have?
Very much the initial thesis, if you will, was to effectively fractionalize myself, to provide them with that experience and that knowledge that I had gained at True and also in my prior roles, much more smaller scale for what they needed and how frequently they needed.
What did you need to believe about the emerging manager ecosystem and the future of emerging manager VC to be able to say, you know what, I have a business here?
Yeah, I think it's twofold. Number one, it was, okay, what needs to happen for me to be able to have enough of a business that worst case scenario, this is a lifestyle business at the end of the day. And that was obvious to me what that was in front of me, not knowing what the emerging manager category was going to look like in the coming 5, 10, and then for the foreseeable future from here on out.
You've built quite a lifestyle business if that's what it's become today.
This anymore, right? So yeah, this is what I was looking for. No. Yeah.
So walk us through what Aduro is today and maybe do that in tandem with the arc of the growth of the emerging manager ecosystem as well, because you've moved up market as well as VC has grown too.
So where we're at today is we manage well over 500 different client relationships, and literally starting with myself and 4 relationships at the outset. So we've grown quite substantially from day one, and that's about 140 billion in assets. We are one of the largest, or depending on how you slice the numbers, the largest provider of fund administration to the venture capital space. Very different than in our outset or at the beginning. And we've definitely scaled over time with that emergence of the emerging manager category, especially if you look at the growth of our firm during the 2020, 2021, and early part of 2022 timeframe. It was just exponential in terms of how much we grew. Yes, we had some inorganic growth as well, which we can talk about, but really we were there in lockstep with that growth alongside of the emerging manager category. Starting out the early days, like I said, with just a handful of clients. And a lot of those clients are still with us today. That's what's really exciting for me, is that we've been able to build something that's scalable, and it really has helped us grow into more of an upmarket player alongside of them.
As an LP in some of those firms, we do get your reports through Fund Panel. So I'm well aware that many of those firms have actually stayed with you, even though they've grown their AUM, which is fascinating. And that's actually something I want to cover, which is, how have you been able to grow with these firms as they've grown? Is there certain things about the services that you provide from a fund admin perspective, both human capital wise as well as technology wise, that has enabled you to do that?
We've had to really invest a lot in, of course, our team. That's core to the service that we provide. But we've had to invest a lot in our technology as well to stay in lockstep with the growth trajectory that a lot of our clients are going through. A lot of these clients have gone through exponential growth from the days when they were just starting up their fund one versus where they're at today. We've had to invest a lot and evolve as well over time. So we've evolved a number of different times our staffing model and how we think about staffing to support the client engagements, number one. And number two, what should we be investing in? What should we be focusing on from a technology investment and development standpoint so as to better support where those clients are today and where they're going in the future, because we really do want to have a platform that they can stick with for the entire life cycle of their firm.
How much has technology impacted the business of fund admin? And maybe walk us back to when you started in the 90s to today. What was different then and now?
In the late 90s, early 2000s, it was really interesting. Having been in the industry for so long, I have implemented systems in the past that were built for the alternative asset space, if you will. And back then, I was literally in a closet setting up a SQL server, installing the system. Everything was localized and was on that server. Very different times to what it is today. And in all honesty, the software and the technology for this industry as a whole hasn't evolved alongside of everything else in the technology industry. So that's what's really intriguing about where we're at today versus where we were in the early 2000s is, yes, everything's cloud-based, but is it that much different than what it was then? In all honesty, no, it's not.
That brings up a few really interesting questions. I want to get to the technology piece of why it hasn't changed, but before I get there, I have to ask the question, fund admin has been a people business. When you think about that from a business building perspective, or investors think about investing in fund admins, they are thinking that this business will scale with people. As you scale, more people scale. So that may have its impact on margins. What does that mean for fund admin? Is fund admin still very much a people business based on what you just said about technology not necessarily scaling with the change that's happened in other industries with technology?
I think it's kind of a two-part answer to that question. So first, going back to your earlier question of what did fund admin look like when I started True, one of the reasons, I think one of the core reasons that there was a little bit more nascent is, especially for venture capital on the smaller side, is that the technology and the people required did not make it a profitable undertaking for a fund administrator to go after that part of the market. And so back when I started at True, there was much more focus on the very, very large VCs or private equity, because that could support the margins and the profitability of a fund administrator to go after that piece of the market. I think that technology has been key in enabling us, and especially Aduro, to get to a point where we can actually effectively support funds as small as 20, 25 million or what have you, but do it in a way that's profitable and beneficial to the underlying client. It's not like we're skimping on anything per se. So I think technology has been core to the ability to actually have a viable fund administration platform for the VC space.
Where is technology most impactful right now?
The way that I always talk about our business is we're always going to be a service first business. We are always going to focus on service first. That is the core of what we are effectively selling. What we're using technology for is to supplement that in a really effective and efficient way. We're using technology to make our team more efficient. We're using technology to make the engagement more effective and efficient with our underlying clients. And that is enabling us to focus more on service and less on the day-to-day task-oriented nature of the business. So removing the manual pieces of doing the day-to-day, automating those to a certain extent so that our team can focus more on the service and the relationship aspect. So coming back to the same core focus of what fund admin has been for a long time.
How much do you think your fund clients, and by extension, their end clients, LPs, care about the human element or the services element of fund admin versus more and more of it being automated with technology?
I think it's a little bit of both. People are looking for both these days, and I think that's what's hard. Clients, the GPs, the LPs, the ultimate investors, everybody wants a little bit of both. They want the modern, dynamic, easy to use portal or the easy to use dashboard, all of their information at their fingertips, but they also want the service orientation to it as well. They want the responsiveness. They want the ability to have a human answer their question or to walk them through a solution or a question or what have you. So I think that there's a little bit of a need for both, which is hard because you're being pulled in two different directions to a certain extent. And we feel like, of course, we're biased, right? But we feel like we've created a happy medium of both blending great service with great technology in a pretty unique fashion.
So walk us through that. You've both built your own technology. You also have partnered with a number of technology-driven firms in private markets, particularly around the post-investment process. We could name a number of them. You've also been a prolific investor as an angel in a number of these firms as well. How do you think about bringing all of these different technology solutions to the table to create a great packaged product and experience for your customers?
The way that we view using technology for the benefit of our clients ultimately is to make their lives easier, to make it more of a streamlined and effective approach to working with them. And for their investors as well. We very much view the LPs as the customer of our customer, if you will. And so we want everybody's life to feel easier by working on our platform. But inherently, all of these clients have a say in terms of what end solution they want to use for different pieces of the process. So whether that be digitization of the subscription process or portfolio KPI data collection or anything else along those lines. So we want to be an open architecture and be very open with our platform of feeding in that information or having our data feed those platforms as well. So very much a unique approach in the sense of working collaboratively with those other platforms, not necessarily trying to solve for every piece of the value chain. We don't want to try to be a one-stop shop and force a client to do everything within our platform. We have those tools, we have some of those products built, absolutely. But if a client comes to us and says, hey, we want to work in this other product, by all means, absolutely. And we're hearing about these products on a regular basis. It's amazing to me to a certain extent how many new entrants there are in and around this market.
It's fascinating to see the explosion of various technology solutions that are becoming these point solutions for different parts of the market, different parts of the post-trade or post-investment process within alts. Brings me to the next piece of this, which is how do you think different funds and fund sizes think about this? Like a true emerging manager, one who you used to work with and maybe still do, they may have different team resources, different time pressures, et cetera, versus a fund that's now scaled, has a CFO, has a head of IR. How do you think about the different customer types and how you can serve both of them, particularly now, given that there are other entrants? I would be remiss to mention AngelList, Carta, much more totally automated, but not as much services oriented, maybe some, but not maybe to the extent that you are as a services business. So how do you kind of fit into that piece, the puzzle in that sense with all the different clients and the client types?
You're absolutely right. The AngelList, the Cartas, I think that they're a great entrant in the market. They are perfect for a small manager that wants to just have out of the box setup, cookie cutter, like just go and do it for them. We see a lot of clients coming over to us for a fund 2 or 3 when they're rolling off of an AngelList or off of a Carta and wanting to basically graduate to a more kind of institutionalized platform, institutionalized experience, especially as they go out and get to more institutional LPs into their subsequent funds. But the beauty of our platform, the beauty of our offering is that we can really tailor not just our services to what a specific client needs at the point that they're at in their life cycle, but also what they need from a technology standpoint. Going back to my earlier point, the more mature firms, they already have ways of doing their deal flow or managing their subscription process, or maybe some firms are working with Cooley, and so they're just going to default to use their vanilla product as opposed to a pass-through or something like that. So we're very flexible in terms of how we work with each of those clients. Again, we're not trying to force anything upon them, but on the flip side of that, a lot of times we do have an emerging manager coming in the door that's raising sizable enough fund to work with us, and they do want just, hey, give us the recommendation. And so we do kind of have an out of the box, okay, here's what we recommend, here's how we'll set everything up. Because we've done it so many times over, it's very easy for us to make those recommendations.
You bring up a really interesting point of you have a ton of experience in this space that may benefit fund managers, but also LPs care about who their fund admin is. How much do LPs care about who the fund admin is and want someone who's been in the market for a long time, is managing maybe more AUA and responsible for that than less? How does that factor in?
I think that that's one thing that institutional investors are definitely looking for is a platform that they know, feel comfortable with, and they can trust. And they've seen a regular stream of information from, historically speaking, as well. That, number one. Number two, we make ourselves available to have those operational due diligence conversations with investors as well. That's how I spend a lot of my time, a lot of days, is actually having those conversations directly with institutional LPs if it's maybe they're new to us, walking them through our process, working them through our SOC 1 audit, all of the fun stuff that GPs don't want to have to deal with, that's what we're dealing with. But then a lot of times we'll just have a regular check-in with an institutional LP because, again, it's a part of their standard process. They're checking the box.
On that point, given that you talk with a lot of LPs, are there any trends you're seeing from LPs in terms of how they're thinking about venture or private markets more broadly?
I think there's more and more interest in the private markets as a whole. I think that VC specifically is going to see a lot more activity. Not that we haven't seen a lot of activity over the prior years. 2023 was certainly a little bit of a pause. But I think in general, more and more institutions are wanting to allocate more to the VC space as a percentage of their overall base. They're starting to get more comfortable, more educated, more familiar with VC, and recognizing that it needs to be maybe like a slightly smaller part of their overall portfolio.
Bring up a really interesting point, and I want to connect a few dots here. So one is VC itself appears to be institutionalizing. I actually wrote about it recently on Allco's Mainstream. When you look at the data, you see the size and scale of the total AUM of VC. You're absolutely right. It is becoming much bigger. You also have such an interesting window into a fund manager's process and perspective, all the way from true emerging manager into larger scaled firm. Another trend that is happening amongst private markets broadly, but certainly in VC, is this evolution into a multi-strategy or platform VC that is a much bigger firm. They've gone from a fund into a business. Is there anything that you can see early on, given that you're on the operational due diligence side and you understand a fund and the fund manager and how they operate, that gives you insight as to which managers are going to go from maybe being great investment pickers and fund managers to being great business builders?
That's a really fascinating question because I always thought that there wouldn't be as much of these new platforms, and there's certainly been a lot more in the market today and within the last 10 years than I thought that there would be in a positive way. And so I think coming on early into the conversation with a potential new client, it's pretty easy to identify how they're talking about not just the current fund that they're raising, but how they're thinking about funds 2, 3, 4, and 5. Is this just them or them and their partner or them and their partners, and they're going to raise 5 funds over the lifespan that they have left from a working perspective? And then that's it. Kind of, we'll do that and we'll shut things down. We're seeing that right now with Foundry, basically saying that 2022 vintage is their last fund. And to a certain extent, they built out a platform, but also to a certain extent, it's that core group of partners, and this is the end of that run. Versus somebody like a Signal Fire. I think that's a great example. When I first met with Chris Farmer, it was pretty clear that this was going to be a prolific fundraising experience working with him, and a quick growth, especially because he was building a business within the realm of what he was building on the investment side of the equation. So building out that data platform that they've become known for. That's the extreme example, absolutely. But there are a lot of in-betweens of thinking about it. Hey, I want to build out this platform that's going to supersede my time in investing.
What do you think are the qualities that you find those business builders have early on when you talk to them?
I think they're seeing what they can execute on today, but they're also seeing the larger picture of what they want to create over the longer term. I think it's just a different mental approach to what they're wanting to build at the end of the day, more so than anything else.
It's fascinating to kind of see that evolution. You've also gone through that evolution as a business too, right? You started in true emerging manager world. You've grown to cover a lot of the VC world. You now cover the private equity world. I want to start with, how did you go as an entrepreneur yourself from evolving your brand as you've gone up market?
It's been a lot of relationship building and a lot of time. It's not an easy thing to move the perception of a brand. For a lot of the early years of our business, we were perceived as the go-to, if you will, for the emerging managers category. definitely a positive and also a double-edged sword. And so we want to move up market. We want to have a broader position in the overall fund administration landscape. So really it's about spending time with the people that we're getting referrals from. All of our business has been built through introduction, word of mouth referrals. It's all built, number one, on our reputation and the quality of service and technology that we're providing back to our clients. But number two, those relationships with the auditors, the lawyers, the bankers, and our existing clients that are providing those referrals back to us. Spending time with them, educating them that, yes, we are known for working with the emerging manager category, but just so you know, we can also work up market. We can work with the larger firms. And we've seen ourselves start to move more and more in that direction, start to move more and more to transitioning larger clients off of other competing platforms.
How different is your service model or requirements for what has been historically your core customer versus moving up market?
So I think that's what's fascinating about the structure that we've built is at the core, it is identical. What I always tell clients is we're trying to provide them with consistent service across the board, whether they are a $50 million fund or a $500 million fund. We want them to have the same experience, the same service, the same core team. And really what it's about is how large that team ultimately is. We've got the same core team on a $50 million fund as we do on a $500 million fund. We just have more of them at the lower levels to handle the increased volume, depending on the size, scale, complexity, et cetera. That's one of the reasons that it's hard for us to really go completely down market and to work with very, very small funds. But I think that is one of the inherent core values that we're able to bring back to our clients is to say, hey, you as a $50 million fund, you're going to get the same experience as these bigger groups. That's really something that we're trying to sell.
Where my mind goes with that is the increasing level of complexity that's happening in private markets, in large part due to the entrance of the wealth channel into participating in private markets. Now, there are platforms that are making things simpler for the wealth channel to access private markets. Is that making things either easier or more challenging for you? And by that, I mean the growth of the wealth channel as LPs in VC and PE funds. Has that changed the work that you do at all?
That's changed the importance and requirement of having good technology where we can scale to that sort of volume. And what I mean by that is a lot of our clients that are more heavily focused on raising money from high net worth individuals, they have hundreds upon hundreds of investors in each of their funds as opposed to the traditional 20, 30, 40, 50 unique names. Using technology to be able to effectively and efficiently manage that is key. Otherwise, it just would not be, viable in any way, shape, or form. So I think that's the core of what's necessary to be able to manage that. And we've seen that. We have clients that have 700 or 800 LPs in their fund.
And is that easy to manage once you have that down pat? And is that really your responsibility, or is that generally at that point, is that a fund that hires somebody to run IR and is responsible for interfacing with those LPs and they leverage you when and where needed?
In a lot of cases, that's still our responsibility. We're the ones handling the capital call process and the inherent follow-up with the high net worth individuals and the questions that come from them. So to a certain extent, that does rely on us. Yes, a lot of these engagements, they do have more internal resource to rely upon because they're just taking a different approach to how they manage their investor base. And so they need that sort of individual for ancillary marketing and additional things that they're doing with that investor base outside of just the standard, investment flow.
As you think about how technology can help augment the process of fund admin, what do you think is missing from a technology perspective that takes fund admin to the next level?
I think a lot of the legacy fund admins, the historical fund admins, and I say that a little bit tongue in cheek because now I'm sitting here, we're 12 years old. We are, to a certain extent, a legacy player. But I think that a lot of the legacy players, they want to be technology forward thinking and they want to implement technology. But I think that they're still behind in really effectively and efficiently implementing technology. And what I mean by that is there's a lot of off-the-shelf solutions out there. I think being able to truly say that you are a tech-enabled service provider, to use a buzzword, you truly do have to have your own technology that you can affect and implement and customize to suit your needs and also to suit your clients' needs. I think that one of the things that I looked at when starting Aduro is I took a fresh look at the systems that were out there, still did not like anything that was available. Everything was cumbersome, overly complicated, overly expensive, or all of the above. That really drove the rationale as to, okay, build versus buy. And I think that that's at the core of being able to customize a solution that works for each and every unique client, not just from a service customization, but a technology customization. We can really tailor our technology to suit their needs. We can customize the look and feel of things that they're sending out to their investors. We can add customized data metrics or data fields, et cetera. And to my earlier point, we can pull in data from other sources or push data into other sources or other platforms that they're utilizing. Having that flexibility on the technology side, I think, is one of the big things that's missing in the market, and creating that platform that can be more interconnected with those other point solutions is critical to be able to continue to scale.
I have to go there, and I'm going to AI. Is AI going to have a major impact on fund admin or not really?
I will answer that in the sense of it's not going to replace people. And I think that's one of the big things that people immediately jump to when they think about AI and how that's going to change an industry. It's like, how many people are we going to replace by implementing or utilizing AI? I don't see that happening, especially in fund administration, because there's so much nuance and so much uniqueness to every single relationship. Yes, there's a lot of standardization, if you will, in terms of waterfall structure. If you're getting a waterfall in a Gunderson format, it's going to look like the next fund over that's also a Gunderson format for the most part. That being said, I can see the ability to leverage AI on top of technology to, again, elevate the team to provide better customer relationship, better customer support, better customer service in a similar way to the way that we've already leveraged technology today, just doing it at a greater extent or a greater point with more time for the people on the team to be able to spend more time on the relationship, to spend more time servicing the client. But I don't think that necessarily comes down to replacing people at the end of the day. Can it automate some of the accounting transactions? Absolutely. We use a general ledger behind the scenes that's already doing a lot of that. We already have transactions, for the most part, being lined up for us to reconcile off. We're using it to a certain extent already. And yes, it will get smarter, it will get better. And so it will just save us time.
Interesting. So it's helpful, but not going to change everything in the industry.
No, I think it'll look very similar to what it is today, just again, being one of those supplements to the industry.
Given that people will still matter in fund admin, another really interesting trend within the fund admin space is you have firms like yours that are getting larger. Many of those firms are backed by private equity. Gen 2 backed by General Atlantic, to name one. Standish just got acquired by TH Lee as another example. There are a number of other larger admins, IQEQ, Alter Domus, etc. There's also a large number of small players. How do you think this space evolves? You acquired one, VMS. How does this all play out?
I think the space is really interesting. It's very concentrated, but also very fragmented, to your point. It's very concentrated with very few large players. To your point, Standish, Gen 2, and the more traditionals of the SS&C, Citgo, et cetera, at the very top end of the market. But behind that, there's a lot of these smaller players. And I think that what's interesting for us is we actually view the Aduro platform as a really unique asset, if you will, not just in the sense of we've got this great platform, we're working in VC, we can continue on into PE, but we think it's a great platform to be able to acquire and to fold in some of these smaller players as well. We think we're uniquely positioned. And we did that with VMS. The reason and the rationale behind VMS was very much, here's a like-minded firm when it comes to client service. Here's a like-minded firm when it comes to how they treat their team and how they support their team. They're lacking on technology because they haven't been large enough to really invest in technology. And they're much more East Coast centric. We're much more West Coast centric. So it all made perfect business sense. And then the relationship building that is entailed in taking that to the next level, obviously that's a softer skill, if you will. But we were able to effectively kind of roll them into the organization pretty quickly and seamlessly, then just recently finished transitioning the clients over onto the fund panel platform, thereby really kind of upgrading the experience for the client, but also upgrading the experience for the team there as well. So making everybody's life just that much more efficient with that technology platform.
How do you think this space shakes out? Is it similar to other industries? Wealth management's a great example. You've seen a lot of roll-up plays and private equity backed. You obviously now in fund admin, you've seen a number of private equity backed plays. Is that how you see the admin space playing out as well?
Yeah, I do. I think scale matters in this space when talking to potential clients. So I think that that's going to become more and more important as more and more people decide to hire a third party administrator, especially when people are looking at hiring a third party administrator for the first time. I think the roll up strategy, for lack of a better term, absolutely, that's going to be how this plays out. Scale will get more and more important, and the smaller players, they'll recognize that they can't grow into those broader relationships, or they can't grow at the pace that they would like because they're not winning as much of those relationships because they don't have that scale. Again, back to your early point of the LPs, they want their managers to work where they're comfortable. They want to have their managers work on a platform that they're very familiar with, that they hear a lot about, and they see frequently. I think that goes a long way. This is a relationship business at the end of the day and reputational.
You alluded to this a little bit, but I'm going to ask a slightly different question. You've partnered with private equity. You're not the only firm to do so. I'm sure private equity firms are thinking about this space actively outside of the GAs, the TH Lees, et cetera. If you were sitting in a private equity investor's seat, how would you think about the fund admin opportunity from an investment perspective?
It's amazing how many firms are focused on this market. I mean, I understand why it's so attractive. It's a great business and it's a growing market. I think the focus from an investment standpoint is twofold. So number one, North America specifically. Europe is a very different market for fund administration. It's much more saturated. It's much more common. And also the LPs almost require firms to have an administrator. That's been very different here in North America. And today you still have about 50 to 60% of the overall VC and private equity market, they're still self-administered. So going back to my experience at True, building an internal team, CFO, a controller, accounting manager, so everybody internal. Even some of these large PEs, they have staffs of over 100 people to support their organization. I think in general, we'll continue to see a shift away from that self-administered approach and much more towards hiring a third-party administrator. And being able to have a technology platform to leverage will be key in winning those relationships in my mind. Again, I'm biased, but I think that being able to have a technology platform that we can leverage where we can work in conjunction with the internal team on the other side to be able to leverage that and all be working within the same data set, the same system, the same platform, it just makes the leap from self-administered to third-party administration that much smoother, making that crossover.
What does the admin space look like to you in 10 years? You correctly predicted the emerging manager ecosystem rising. That was a little over 10 years ago. What's the next 10 years look like?
Well, I will caveat that I did not expect the emerging manager category to be as big as it is. What I always tell people is there was absolutely quite a bit of luck involved in that. Yes, we executed really well and we've taken full advantage of that. And my team's been amazing in helping us get to where we are today. Where it is in the future, I think it's going to be much more of this technology centric in terms of decision making of who you're working with as a fund administrator or who you're working with for a fund. It will center again around the service, absolutely. Because that's core and that's paramount to make sure that we've got the right people making the right decisions, making sure that errors aren't happening, things are being computed correctly. That is still going to be people dependent. But in conjunction with that, a scalable, customizable, tailorable, flexible technology platform is going to be paramount to a successful fund administration platform. And I think that off-the-shelf software, yes, everybody is rushing to build stuff for this market, but I think that also almost makes it more difficult because there's a lot of noise. I get introductions almost on a weekly basis of, hey, we're looking at this product to utilize for our portfolio data KPI collection. It's one of 20 that I haven't heard of yet. So being able to be flexible in pulling in or pushing data will be key.
So you can actually answer this question with fund admin as your answer if you'd like, but I always ask this question to every guest, and it's, what is your favorite or most interesting alternative investment?
I think my favorite alternative investment is definitely into a company, a fintech company, kind of in and around this space. And I won't name one specifically today because I don't want to call one out versus the others. It's kind of like I've got 3 children. I'm not going to name one of them my favorite over the others, even though all of them would say that they're the favorite and not the others. But I think that there's a lot of really interesting things being built in and around this space. And yes, I have a lot of fund investments in fund managers. Those are phenomenal. I get really excited when I'm invested in something that's doing something unique or just making this process more efficient at the end of the day.
What advice would you give to builders who are trying to build in private markets, given that A, you've built a business in this space, and B, you've invested in a number, like you just said?
Relationships are so key to this business, and even if you're just building technology for it. Those introductions and those relationships within the alternative space are paramount to and critical to having a successful, not only product, but also a sales process. I would say that at the core, and knowing that it is fragmented. There are so many players in this market and so many players getting pulled into different aspects. I think one of the other difficulties in building something for this market is to actually honestly stay focused. I see a lot of players out there. They start by building something towards solving for a specific problem. And then quickly, one of their customers says, oh, you could also do this for me too, right? And they get pulled into that, and then they get pulled into something else. I think focus is actually really important and really hard. A great example is Passthrough. They do a couple of things really, really well. I think keeping that focus and clarity is key.
I may be a little biased. We invested in Passthrough as well, so I agree with that sentiment. But yes, no, I think there are a number of really interesting solutions. There are so many specific problems to solve and point solutions to solve that you do that really well. You can build a good business. Now, I think there are questions as to whether or not the true end-to-end solution will ultimately win, and maybe they take those products in or they build their own version. I think that's going to be where it gets really interesting in the alt space. And I'm sure, as you've built out your platform, you've probably had to think about that too, right?
Yeah, I have. I've thought about build versus partner, because you could start to get pulled into every direction and say, oh, I could build that, I could build that, I could build that. Because we can. It's just about time. But also, it is about, to a certain extent, knowing that our customers are going to be wanting to select specific aspects of how they work and how they operate. And so we want to be flexible in that vein at the end of the day, for sure.
That's so key in this space to figure out where to build, where to buy, where to invest, where to partner. And I think you mentioned something else that's really interesting that I think is somewhat unique to the alt space, which is having strategic partners. I think in this space, maybe more than most, really does matter. That's why I think your advice around relationships and building really strong relationships with various players in the industry is really important in this space, because the large players can exert a lot of influence, and that really does matter.
Yeah, it is still a very reputation business and relationship. Every time I have a conversation with somebody, it immediately comes back to other people that we've known or interacted with, et cetera. It is a large market, but at the same time, it's a small overall community of significant players in the market. And to your earlier point, is fund administration going to be a roll-up strategy over the long term? Yes, absolutely. I think absolutely there's a potential for a roll-up of a software strategy in this space as well. Not to get too far off track, but it's very fragmented. There's a lot of point solutions that you could create that end-to-end solution with a really solid set of these.
Well, for someone who's out there listening and sees an opportunity to roll up a bunch of software solutions, maybe this is the prompt. So, Braughm, this has been an incredible journey of both what you've done with Aduro and fund admin more broadly, as well as the venture ecosystem and private markets more broadly. Fantastic overview, insights, wisdom. Thanks so much for coming on the Alt Goes Mainstream podcast.
Yeah, thank you so much for having me. Really, truly enjoyed the conversation.
Awesome. Great to have you. Thanks for listening to this episode of Alt Goes Mainstream. I hope you enjoyed it. You can read more about alts at my Substack, altgoesmainstream.substack.com. Thanks a lot and have a great day.
We're going